Before I get into any of this, I promise you it's going to be a short video. I'm going to get you guys in and out within 10 minutes. Audience retention is something that I've been working on. Retaining the audience for a longer period of time, so I decided that we're going to be making shorter videos from now on. And so it's going to be a short, quick 10-minute video, and I'm going to get all the information out to you guys in those 10 minutes. So stay tuned, watch the whole video. Again, promise you, you'll be in and out within 10 minutes. And I'm going to be pretty straightforward with what we're going to be talking about. So first off, Nasdaq trade review. Second, Nasdaq analysis. Those are all the different things I want to use. I'm a data-driven person, meaning that I simply look at the market-generated information, and the market-generated information is quantitative, meaning it's based off of numbers. Numbers don't lie. 1 + 1 = 2, 2 + 2 = 4, right? Numbers do not lie, and I am data-driven, and I use that data. Russell versus Nasdaq. Looking at previous bubbles, it's going to be looking at previous bubbles on a relative basis with different indices on the Russell versus Nasdaq, and then the new trade we're putting on right now. Okay, so those are all the things we're going to go over. Again, I like to be straightforward with what we're going to go over. Straightforward and quick with this, right? So for the Nasdaq trade review, for those of you who don't know, I have a trading advisory. You guys find it at alphaaction.substack.com. It is free for the next 2 weeks. We're going to do a 2-week free trial for up until about the middle of September. So 2 to 3 week free trial that's going on right now. So opening trade alert for QQQ. This is what I sent out to my subscribers. They get an email notification of this, and I send out trade alerts, and then every morning I do a pre-market wrap. I also take ticker requests for them, where in the pre-market wrap, in the comments section, they can put in tickers and say, hey, can you review these tickers? And I also answer all the questions in the comment sections of these posts if they have any questions regarding what's going on with any of the trades or pre-market wraps. We're really just talk about what's going on pre-market and what do I expect in the shorter term. And then on the YouTube channel, I talk about longer term analysis. So opening trade alert for QQQ. Based off of bullish bias on QQQ, I want to place a butterfly spread on the upside instead of just buying naked calls or call spreads due to the location of this trade. So let me actually show you guys the location of this trade and walk you guys through everything. You only really want to buy naked calls when the volatility is low. The volatility is still high inside the Nasdaq, and we're seeing upside volatility expansion. So I don't want to buy calls. I'd rather buy call spreads. But call spreads are still expensive, and there just was not good trade location. So I got in on the 24th of August, so right here. Now, I didn't want to get in right here after this big move up, and then it might just start to turn around, and I might be late into the trade, right? It was bad location. With that said, if you have proper trade structure, you can get in even at a bad location. And so instead, I used a butterfly spread. Butterfly spreads are really cheap. They are multi-legged, but they are really, really cheap. You buy one, you sell two, you buy one, and this makes it really cheap. I mean, this butterfly spread right here costs about $30 to put on. So you could put it on for essentially 0.1% of the underlying stock's price, or the underlying ETF's price. That's how cheap it was. And we keep our position sizing small. The question that everybody has, is this a bubble? And I'm saying yes, it is. But if there's a bubble, I want to participate in it, right? And make money off it while it's going up. And then when it does go down, I have proper position sizing where I risk such a small amount, 2.5% of portfolio, that I can keep such a large amount of cash. And if it does start to go down, I have a game plan. And the game plan with butterfly spreads are that if it starts to go down and you are sure that's going to go lower, take that call spread that you bought, get rid of it, keep the call spread that you sold, roll it down, and then roll it down again and again and again, and you can now make money from the price going down. And so that's how you can make money during the bubble and when the bubble bursts. When the music stops and the bubble starts to burst, you can make money from it going down. And I told them this trade has a debit of $36 per unit, and if we get a pullback in the Nasdaq over the next 2 hours, you could easily get filled for less. So I'm actually going to zoom in and show you guys what we were seeing on Nasdaq futures at the time. So 24th, it was right here. I put out the trade alert just about right here, and we did eventually get that pullback. It was right here. We got a pullback up until about 11 o'clock. So it came out 9:30, put out the trade alert, said we're likely going to get that pullback over the next 2 hours that I had mentioned in the pre-market wrap, but I just wanted to let everybody know so they can get that email notification and they'll be aware of what's going on, and they can prepare and start slowly getting their limit orders in there. And at 11 o'clock it bottomed, and we rocketed a lot higher. And it wasn't even that big of a move, right? But that's the thing with butterfly spreads. They're just so cheap. They expand so easily that all you need is a small move, and it expands really quickly. So that's what I did first. Later on, I closed out that spread, closed QQQ Butterfly for 150% profit. I did this Thursday morning, so in less than 3 days, we were out of this trade for 150% profit. And so we made, if you had taken your whole portfolio and put it inside the Nasdaq, we made the same amount as that person, yet we took 40 times less risk, risking 2.5% of our portfolio. That is how you participate in this sort of a bubble market. And so I just told them that I was getting really overbought and I wanted to cut the trade because this was probably a temporary top and there was consolidation. And of course, it did end up being a temporary top. It was just about right here, and then we rocketed higher. They would have sold into that right at the top, and we actually, that has so far been the top. And then we have opened up a trade after that right now. So let's talk about the Nasdaq. I'm going to go on to the 4-hour chart. Let's talk about the Nasdaq. I'm a data-driven person, so I like looking at the market-generated information. Advanced decline line. First off, what is that? That's up stocks minus down stocks. This gives me a good view of whether the whole market's going up or the whole market's going down. I don't want to be in a situation where 9 stocks are going down, but only one big stock like Apple is holding up the whole entire market. That is unhealthy. It's unsustainable. And that is the situation in the Nasdaq. With that said, that can last for years and years and years. That has been going on now since the March lows, where the Nasdaq and the social stocks are going higher, but everything else is just really stalled out. And the Russell and the financials, they just cannot get higher. And so yes, that is true, but if I have proper trade structure, I can take advantage of upside and risk a really small amount, and if it does start to fall, I can quickly just do an adjustment on the trade and actually make money on the downside. So I am aware of that, but it's just one data point. Breadth, that is amount of volume into up stocks versus volume to down stocks. And what breadth is telling me is that although advanced decline line is bearish, the breadth is telling me that the volume into up stocks is a lot more than the volume into down stocks. And so yes, there are a lot of down stocks and the advanced decline line does not look good. With that said though, the breadth is telling me that eventually I'm going to have to worry about it, but I don't have to worry about it right now because the volume into up stocks is more than the volume into down stocks. Cumulative tick, this one is looking good right now. That basically tells you the momentum. If big institutional buyers want to buy into the Nasdaq, they constantly have to be hitting the bid, and so it pushes up the cumulative tick. It measures every single tick, and then it adds the ticks up, and we're seeing this big build in the ticks. So that's really how that's looking for bullish momentum right there. Price outside of 1 standard deviation of realized volatility. That is why I took the last trade off yesterday, because we were starting to get overbought. But we are now outside of that overbought state on a shorter term basis, and I do think we could go higher from there. But that's more of a really short term entry exit type thing. It's not a longer term indicator. POC and value area. So what is a POC? What is the value area? POC is the price at which the most volume traded. So an auction, there's a big market. A market is where you trade a bunch of stuff, right? Any market, not just the stock market. An auction is what you call it when you trade. The success of an auction is based off the volume, right? If I have one buyer, one seller, it's not that successful. But if I had a big auction with anything, right? Even if I had like a real estate auction, but I had 1,000 different buyers show up and I had a bunch of different sellers selling all their real estate, that is a successful auction, right? The more successful an auction, the higher the volume. So the point of control measures that right there. And what we're seeing is that when you have a situation where there is 100 different buyers and there's one seller, the seller is likely in charge. But when you have a situation where there's 100 different sellers, there's one buyer, and then the buyer becomes in charge, and they can actually control a lot more. The value area, and we're actually seeing the point of control move higher and higher. That's called point of control migration. You can look at the volume and see the point of control every single day and the price at which the most volume traded, and it's just moving higher every single day. That's bullish. The value area, that is where the 1 standard deviation, about 68% of that day's volume took place, and that is also migrating higher. So that's bullish right there too. Russell versus Nasdaq. Let's take a look at that. Again, I want to get you guys out quickly. I'm trying within 10 minutes. So Russell, and then let's actually do Nasdaq, and we'll divide it by the Russell. So we can look at it on a pairs trade on, let's go out and look at it on the monthly. So what we're starting to see is we're getting to dot-com bubble highs, but I need to see something. I need to go and see something that's going to tip the momentum, right? Things can stay overbought for a long time. During the dot-com bubble, things were down here, and people were talking about the fact that there was divergence right here. because the divergence had gone up since the early 90s up to right here, but the divergence just kept on continuing, right? So it can continue for a long time. These bubbles, they can last years and years and years, or more than a decade. So what I need to look for is that yes, it is overbought. Yes, the Nasdaq is going up. Nothing else is going up. What I need to see is that I need to see the cumulative ticks start to really weaken, and I need to see going ahead that the breadth starts to say that the advanced decline line is starting to become more important, but I'm not yet seeing that. But when I do see that, it starts to become a bearish sign right there. And that's the reason I really just don't like overbought, oversold indicators, because things can stay oversold for such a long period of time. Things can stay overbought for years and years and years. The argument can be made that this market has been overbought since the year 2014, right? And it really has based off of certain types of indicators. But it can stay overbought for a very long period of time. And it takes a very long period of time to get out of that overbought state. These things can last years and years, and I'm just not seeing the signaling yet. Okay, so we did look at previous bubbles, new trade going forward. So the new trade, opening trade alert, QQQ, upside butterfly spread. I still have a bullish stance on QQ, and I will use butterfly spreads on the upside, take advantage of it, as location isn't great. Again, location is not great, right? You're buying all the way up here after it's gone up 70% from the bottom. The location is not really great, and it is still in a longer-term overbought state. I did just talk about how I don't think that, I think it's important longer term, but those indicators can often, those oscillators that tell you overbought, oversold, they are often misleading because things can stay overbought for years and years. Here's a trade: buy to open 300 call, sell the 305, two of the 305s, and then buy one of the 310s. You guys can just pause the video right here, take a look at this. Position sizing a bit larger, but it's 3% versus 2.5%, but it's still pretty small compared to those people that are taking a lot of risks, putting their whole portfolio in the Nasdaq. So that's all I have for you guys today. Hopefully this video was below 10 minutes. I don't know yet. I'm going to have to check afterwards. But again, link in the description below, pinned in the comment section. If you guys want this service, if you guys want to become a client, it is free for the next 2 to 3 weeks until the middle of September. And then after that, we will be charging $49 a month or $499 a year for the annual plan. You guys get all the trade alerts. You guys get the pre-market wraps that gives you my perspective pre-market. You guys get ticker requests, meaning that you guys can send me tickers you guys want me to look at, and I answer all of your questions, and that's done inside the comment section below these opening trade alerts or below the pre-market wrap, where you just send me tickers that you want me to look at and questions you want me to answer. Thanks for watching, everybody. We'll see you on the next one. Stay safe, stay profitable, and happy trading.